Yeah, but Hyundai reported numbers, inline performance in the fourth quarter, supporting realization came through. Company aims to launch a 526 new car by 2030 and is expecting 7 to 8% export growth this financial year. My colleague Parikshit caught up with Tarun Garg, whole-time director and COO at Hyundai Motor. Began by asking him about the quarter gone by and how they see growth going ahead.
It was a very satisfying quarter. You saw the results coming in. As you know, Hyundai India, we believe in volume, market share, and profitability all put together, having a balanced growth approach, especially focusing on the quality of growth. So if you see the EBITDA margin for quarter four was at 14.1%, which helped us to have a yearly EBITDA margin of 12.9%. Return on capital employed was very healthy at more than 40%. The PAT, all the numbers look quite good. So we are very encouraged, both by the market response as well as the overall numbers for quarter four. Going ahead in financial year 24-25 and 25-26, we can see that there are some headwinds, of course, but like every 5 years in the industry, we see a year where we see some muted growth. So we have to see how to navigate in these situation of macroeconomic as well as geopolitical challenges going forward.
Right. Now, you spoke about muted growth. This has been a concern for Hyundai and other companies as well. How are you navigating this, and how will you diversify your product mix, also your export strategy to deliver your growth targets?
Absolutely. So look, first of all, we are not really very worried about it because I have been in the industry now for 31 years and I have seen those ups and downs. In fact, if you see the last 20 years, after every 4-5 years of sustained growth, 1 year of a muted growth has always come in. Here also post-COVID, we saw some huge growth, more than 20%, more than 10%. CAGR though has been hovering around 4.5-5%. So we have seen that because of the geopolitical situation, Indo-Pak tensions, of course, the uncertainty around the tariffs. I think one thing which a car customer does not like is the uncertainty. And I think that has really affected some kind of a IT slowdown, of course. The interest rates have been high. But when we see the positives, I think now we have seen the repo rates coming down. We see that the tariff uncertainty is also kind of probably becoming more clearer on the positive side. We have seen the stock market rebounding, over the last month or so. So I think things are looking good going forward. And as far as Hyundai is concerned, we believe very strongly in the growth story of India. And you would have seen our very, very aggressive launch plan of 26, launches in the next 5 years until financial year 30. Which includes 20 IC cars and 6 EV models. So we are pretty confident. Our new plant is coming up in the quarter 3 of financial 25-26, which will not only give us more, space for both domestic and exports, but also, with the new plant, the new model cycle will kick in. So I think there are more positives, looking forward, both for the industry as well as Hyundai.
What I would also like to ask you is about the sentiment going forward. How does quarter 1 of FY26 look to you currently when you compare the sentiment and performance in quarter 4?
So look, India is a very seasonality-driven market. We all know that, like for example, if we see the financial year, H2 of a financial year is always much more retail-driven with the festivals coming in. So October to March is generally a very high retail period, whereas April to September is probably a muted period because of the no festivals, because of also the heat waves in the northern part of the country. So, but this is very normal. So I think there is nothing to be very perturbed about. Things are improving, like I said, both in terms of the stock market sentiments, in terms of geopolitical, in terms of macroeconomic. So I think we have more reasons to be positive, especially on a Hyundai front. In the quarter 3, with our new plant coming in and the new model cycle kicking in, I think we are more optimistic than ever.
Right. What will be the initial capacity of production at Talegaon, which comes into effect from quarter 3 of FY26?
So we will have the capacity of 170,000. So currently we have the capacity at the Chennai of 824,000. So this will take us to 994,000. And I think one very big thing which is going to change is a big thrust on exports. Of course, right from the time we set foot in India, exports has been a very important part of our strategy. Currently, exports are contributing about 21% of our total volume. Going forward, by 2030, we believe the potential is to reach about 30%. So we are really looking at not only in terms of the new products which are going to come in the IC space, but also in the EV space as well. So we are currently catering to the developing markets, emerging markets, Middle East, Africa, Latin America, Asia, of course, and of course, like I said, with the EVs kicking in and more models, especially in the SUV space, I think opportunities only keep on increasing. For example, last year, we launched the Exter in South Africa. Next year, we are going to launch the left-hand drive of the Exter, which will improve, which will add on many more markets, especially in the Latin American market for us. So I think we are very, very determined that to really leverage this export opportunity which is coming to us.
What do these FTAs? India has signed an FTA with the UK. They are on the verge of signing FTAs with European Union and United States as well. What could this mean in terms of using India as a manufacturing hub for other global markets in Europe, in US and UK for that matter?
Look, like I said, the advantage HMI holds is that we are a part of a very strong group, and Hyundai Motor Group has presence all across the world. We are doing so well in US, we are doing so well in Europe. And of course, India is the hub for the emerging markets. But going forward, I think these are very interesting. Probably, not only Europe, but maybe, there will be opportunities in the Southern Hemisphere, maybe Australia going forward as well. So it is very difficult to really comment right now because the contours are still being finalized. But I think we are really looking at these FTAs with a lot of excitement and interest. And we will see what new opportunities can come in, especially when more and more EVs come in. You have seen in our plan that out of those 26 models, 6 are going to be EVs. So I think that will really open up more space for us in addition to the current markets which we cater to.
My final question, sir, would be about how do you plan to use the capex outlay? You've got a 7,000 crore FY26 capex outlay. How will this be spent for capacity expansion, for manufacturing, and also for product development?
Like I said, look, the exact guidance on the capex we will be sharing during the investor day. On a broad basis, about 60 to 65% is towards the capacity expansion in Pune, as well as for the new models. You have seen our very aggressive new model plan. I think this is very good, very good. Our track record on return on capital employed is extremely good. Even in financial year 24-25, it was more than 40%. So I think this is very good news for us. And we are generating cash, which means that we have been able to utilize our internal resources for this capex. But further guidance will be given during the investor day in September.